Hey everyone, Henry Charles here with US News 24. If you're holding a green card right now, what I'm about to tell you could literally save or cost you thousands of dollars. Stop scrolling and listen up. I was talking to Maria last week. She's had her green card for 8 years, works hard, saves every penny, does everything by the book. And she called me almost in tears because she just discovered a tax regulation hitting in 2026 that she had absolutely no idea about. This one change is about to hammer her savings harder than she ever imagined. And here's the reality. Maria's not alone. There are millions of green card holders in this country right now, completely in the dark about this. In 2026, the IRS is implementing stricter enforcement of something called FATCA, the Foreign Account Tax Compliance Act. This isn't a suggestion. This is going to change how the government tracks your money if you have financial accounts outside the United States. And the penalties? They're devastating. Let me break down what you need to know right now. When you got that green card, the IRS classified you as a resident alien for tax purposes. That means you're taxed on your worldwide income. Every single dollar you earn anywhere in the world. It doesn't matter if you have a bank account in India, Brazil, the Philippines, or anywhere else. If you're a green card holder living in America, the IRS wants to know about it. Full stop. Now here's what's changing in 2026. The Treasury Department is cracking down hard on foreign account reporting. If you have a foreign bank account with more than $10,000 in it at any point during the year, you're required to file an FBAR, a foreign bank account report. This rule isn't new, but the enforcement absolutely is. And the penalties are brutal. We're talking $10,000 minimum for non-willful violations. But if the IRS determines you willfully failed to report your foreign accounts, the penalty jumps to the greater of $100,000 or 50% of your account balance. Let that sink in. 50% of everything in that account, gone. But it's not just bank accounts. The new regulations are coming down on foreign investments, overseas retirement accounts, foreign real estate, business interests, trusts, everything. If you own property in your home country, if you have a pension from a previous employer overseas, if your family set up any investment account with your name on it, that all needs to be reported. And starting in 2026, the IRS is getting much more sophisticated about finding out what you've got. Foreign financial institutions are being required to report detailed information about U.S. account holders directly to the IRS. These banks, investment firms, they're highly motivated to comply, or they get cut off from the U.S. financial system entirely. Which means, if you have assets abroad and you haven't been reporting them, your chances of getting caught just went way up. I know some of you are thinking, I'm planning to move back eventually anyway, so this doesn't apply to me. Wrong. As long as you hold that green card, you're subject to these rules. It doesn't matter where you live. It doesn't matter what your future plans are. If you're a lawful permanent resident with an active green card, you have these tax obligations. And this is where I see people get into serious trouble. There are green card holders who moved back home years ago, haven't lived in the United States for a decade, but they never formally abandoned their green card status. They just left and thought that was it. But legally, they're still green card holders. They're still supposed to be filing U.S. tax returns every single year, reporting their worldwide income. When the IRS catches up with them, and they're doing it more frequently now with international information sharing agreements, these people get hit with years and years of back taxes, penalties, and interest. It can be financially devastating. So what do you need to do right now? First, get organized. Sit down and make a comprehensive list of every single financial account you have outside the United States. Every bank account, every investment account, every retirement or pension plan, every piece of property, every business interest, everything. Don't leave anything out because you think it's too small. The IRS wants to know about all of it. Next, figure out if you've been properly reporting these assets. Have you been filing FBARs every year when required? Have you been including your foreign income on your Form 1040? Have you been filing Form 8938 if your foreign assets exceed the reporting threshold? If you don't know what I'm talking about, that's okay. but it means you need professional help immediately. Let me give you some real scenarios because I want this to hit home. Say you came to America 5 years ago, got your green card, and you're building your life here. But back home, you still have a bank account from when you were a teenager. Your parents deposit money into it sometimes as gifts. Maybe there's $15,000 or $20,000 in there. You haven't thought much about it because you don't use it regularly. But under current law, you should have been reporting that account every single year on your FBAR. If you haven't, you're out of compliance right now. With the 2026 changes, chances of this being discovered go up significantly. What you need to do is consult with a tax professional who specializes in international tax issues and get yourself into compliance as quickly as possible. Here's another common scenario. You inherited property from a relative back home. Maybe it's the family house, maybe it's land, maybe it's an apartment being rented out. You own a percentage of it because there are multiple heirs. You might think it's not a big deal because you're not really managing it and you're not getting much income from it. But the IRS sees it differently. That's a foreign asset that needs to be reported. Any rental income needs to be reported. Any gain when the property is eventually sold needs to be reported. If you're not doing these things, you're setting yourself up for serious problems. I also need to address something I see constantly: people supporting family members back home. That's not a problem from a tax perspective, generally speaking. You're allowed to help your family. But if you're sending large amounts, if those family members are depositing that money into accounts with your name on them, if there are joint accounts or shared assets, that creates reporting obligations you might not know about. Here's something that catches people completely off guard. If you're a green card holder and you receive a gift from a foreign person, family member or anyone else, and that gift is worth more than $100,000, you have to report it to the IRS on Form 3520. You don't pay tax on it. Gifts generally aren't taxable income in the United States, but you do have to report it. And if you don't, the penalty is 5% of the gift amount per month, up to a maximum of 25%. So if your parents gave you $150,000 to help you buy a house and you didn't report it, you could be looking at penalties over $37,000. The 2026 changes are also going to affect how the IRS monitors currency transactions and large fund transfers. There's going to be enhanced systems for tracking international wire transfers. Financial institutions have to report more information about their customers' cross-border transactions. So if you're regularly moving money between countries, even if it's your own money between your own accounts, it's creating a data trail the IRS can see. None of this means you're doing anything wrong. You're absolutely allowed to move your own money around. But you need to make sure you're reporting everything properly. I hear a lot of people say, well, I already pay taxes in my home country on this income or these assets, so why should I pay taxes again in the United States? That's a fair question. The good news is, the U.S. does have foreign tax credit provisions that allow you to credit taxes you've paid to another country against your U.S. tax liability. So in many cases, you're not going to end up paying double tax on the same income. But, and this is critical, that doesn't mean you don't have to report it. You still have to tell the IRS about the income, claim the foreign tax credit, and file all the necessary forms. You can't just skip reporting it because you already paid tax somewhere else. Here's the bottom line. Being a green card holder is an incredible privilege and opportunity. It allows you to live and work in the United States, to build a life here, to pursue your dreams. But it comes with serious responsibilities, and one of the biggest is tax compliance. The rules can be complicated when you have financial ties to more than one country. But complexity is not an excuse. You need to understand your obligations, and you need to meet them. Right now, before 2026 hits, is the time to get your house in order. Don't wait until you get a letter from the IRS, because by then it's going to be much more difficult and much more expensive to fix. If you haven't been properly reporting your foreign assets and income, if you're not sure you've been doing things correctly, if anything I've talked about today has made you nervous or uncertain, you need to take action now. Here's your move. Consult with a qualified tax professional, preferably one who specializes in expatriate and international tax issues. Yes, It might cost you some money up front to get professional advice. I promise you it's going to be a lot less money than you'll pay in penalties if you don't get compliant. There's also something called the Streamlined Filing Compliance Procedures. It's specifically designed for taxpayers whose failure to report foreign income and assets was non-willful, meaning you weren't trying to hide anything or evade taxes. You just didn't know or you made a mistake. Through this program, you can file amended returns, pay any taxes owed plus interest, and potentially avoid the crushing penalties that would otherwise apply. But you have to come forward before the IRS comes to you. Once they initiate an investigation or contact you about unreported foreign assets, it's too late to use these programs. Look, I know this is a lot of information and it can feel overwhelming. You came to the United States to build a better life, not to become a tax expert. But knowledge is power. And now that you know about these changes coming in 2026, now that you understand how serious the reporting requirements are and how strictly they're going to be enforced, you can take the steps you need to protect yourself and your family. If this video helped you, hit that like button and subscribe to US News 24, because we're constantly bringing you the latest information on immigration policies, tax changes, and everything else that affects your life as a green card holder or someone pursuing permanent residence in the United States. Ring that notification bell so you never miss an update that could impact your financial security or immigration status. Right after you finish watching this, leave a comment below. Tell me, did you know about these reporting requirements? Have you been filing FBARs? Do you have questions about your specific situation? I read every single comment. Your questions help me understand what topics I need to cover in future videos. And don't put this off. Your financial future is too important. Staying informed and staying compliant is how you protect everything you've worked so hard to build. I'll see you in the next one.